Hey guys, what's up? Today we'll be talking about stop loss management. So let's get on with the video. So the basic premise is that when looking at charts, we look for setups first, entries second, and finally stop losses. So for example, you see a structure. This is a range. You see a structure like this, and this breaks down, and then it's here. So you would look for a structure first, and then entry second, and then finally you would be like, oh, I've placed my stop loss somewhere here, something like that, right? So now what if we did the reverse of this? So we only take trades that have a stop loss that we like. So for example, again this is a range, price is trading here, breaks out, comes back in this range, and we feel like it's going to go down, right? So now let's say we put our stop loss somewhere here, stop loss. So now we're like, okay, so if I put my stop loss here, this gives me a good risk to reward ratio if my target is somewhere here, right? So that's how one way you can take a trade, right? Thinking of the stop loss first. There's literally nothing wrong with not taking a trade if your stop loss is way too far off, so that you don't get a good risk to reward ratio, or if it just does not make sense. It's completely okay if you guys don't take a trade. At the end of the day, it's not like you're losing money. If the risk to reward ratio is not right, if for example you're risking 10% of your account to get 15% of profit, and this is a very bad risk to reward ratio, right? So sometimes it's just better to sit on your hands. Sometimes also the market offers you a stop loss that is built in, which is easy to identify, replicate, etc. This is what we'll be talking about. One thing we should all consider is that markets are not clean and accurate. It's not necessary that your support level it's not necessary that your support level has to support like right here, like right there. It can go lower, then come back again, or higher, then come back again. Markets are not clean, right? We know that. The sooner you realize this, the better. Breakouts fail, breakdowns fail, etc. Markets do what they want socially, right? Stop loss. What? Just looking at the level and a technical structure, such as a failed breakdown, failed breakout, is not enough to take a trade. For example, I showed you some structure here. This is not enough to take a trade. You should know your entry, exit, target, all that shit. You should always have an invalidation in mind. That means that at a certain point, your trade is invalid. That means your trade is no longer valid. It's not going to go in your direction. Below, above here, my idea is invalid. End of story about it. That's how you should trade. If the risk to reward ratio is not good, don't take the trade again. I mentioned this point. Not being in the position does not harm you in any way. This is the most important part. Don't trade just for trading. I will give you 2 stop loss out of 6. Right, moving on. So, this is what we will be talking about. False breakout, and false breakdowns. This is like the most common type of setup that you see all over Twitter, YouTube, Instagram, etc. Right? Very common. So, meaning when price goes above or below a major support resistance level and falls back into the same area again. So, like I showed you guys, this is resistance and this is support. Price is here, it goes here, breaks resistance, falls back into the same area, same range, and price goes above or below a major support or resistance area and falls back into the same price range, right? For example, this is the example I'm explaining here. Price breaks out of the resistance area and then falls back into it. A lot of breakout traders thought that the price would go higher once it broke out of the resistance right here, right? Instead, now the price is back in the same range again, and breakout traders are underwater, and they only have these options. So people that thought we're going to go higher are now underwater because the price is here. Now they have three options: close the trade for a loss, get liquidated, wait for market to revisit their entry. As breakout and breakdown traders close their long short positions, these turn into orders to sell, buy, and it makes price go up or down. For example, let's say this is support, price goes down, and the breakdown traders are like, oh no, price is going to go here. So they're like, let's short this, but price comes back here, and they're like, oh shit, what do I do now? Price is back into the range. They close their position, they close their short positions, which are in turn orders to buy. So what they're basically doing is they're buying at support by closing their position, which drives price up. Works the same way around. So where should I put my stop loss? There are two ways to put your stop losses in the structure I mentioned above. The structure is breakdown and breakout, failed breakdown and failed breakout. Right? So you got the furthermost deviation. Meaning, furthermost deviation is the highest high or lowest low price made outside the technical structure, which is support resistance structure. More conservative approach, as it offers a wider stop area, less likely to get stopped out of a trade, and offers worse RR situation. Shall I explain this? So, for example, this is a resistance area, right? Price goes up, breaks the resistance, and the breakout traders are like, oh, price is gonna go up. But what price does instead is it falls back into the range, and all these people are underwater, right? And they close their position, which makes price go down. Same thing that I explained earlier. So now the main question here is, where would you put your stop loss, right? So furthermost deviation is the first setup. So what you do is, let's say you enter when the candle closes here. So you enter here on this candle close, because it closed below the resistance again. Your stop loss here would be somewhere here, right? This would be a stop loss. This is the furthermost deviation, and your stop loss would be a little above that. You don't want it to be exactly here, you want it to be a little above it, right? This is a more conservative approach because the difference between your entry and the stop is a lot. And for example, if you enter here, you'll be targeting, let's say, these lows. That gives you a good right. This was the furthermost deviation, the first setup. This is more conservative. This is a more conservative approach, as it offers a wider stop area. The stop area here is wide, right? It's a more conservative approach. You're less likely to get price go there again, right? Less likely to get stopped out of a trade and offers worse RR. The risk to reward ratio in this, when you put your stop loss here, will be a lot worse, right? So the second setup is first candle stop. Meaning, first candle stop is the candle that took price back within the technical boundary. So, right. So here, this is a more aggressive approach, as it offers a narrow stop area, and you are more likely to get stopped out of the trade here, but it offers you the best RR. And personally, I avoid thrust candles, unless it is a very clear indication. So here here price broke a support area, went down, and price went up again, and what we're looking for here is a break of this level again. We got a break of this level again. So now I enter my position here. I look for entry here as the weekly candle closes, right? But if I put my stop here, like the first setup of further moves deviation, there will be a big gap with my stop loss. This will like worsen my risk to reward ratio, right? Because if I'm targeting, for example, this high, then this is a bad risk to reward ratio. So now what I do is, instead of putting my stop loss all the way here, I put it here. I put it at the thrust candle. Thrust candle is the candle that took price back into the range. This is the candle that took price back into the same range, right? So I put my stop loss here. You are more likely to get stopped out here, and it's more aggressive than this. So like you can see the difference. This and this. You're less likely to get stopped out here. Less likely to get stopped out, and you're more likely to get stopped out. It depends on the context as well. Here, if you did a thrust candle stop, it would work. This stop would also work. But if you did a thrust candle stop, you would make a better right? So yeah, one more example. But these are the same thing. Right. So that's it for the video, guys. Thanks.